You're listening to the Zipline Logistics Truck Yeah podcast, where we explore all kinds of hot topics in the logistics industry. Get ready to learn, laugh, and get your freight on. Ladies and gentlemen, welcome back to another edition of the Zipline Logistics podcast. My name is Jesse Jewett. Joined with me, as always, our Director of Training and Development, Teddy Lee Knox. Teddy, good afternoon.
Good afternoon.
You can't start laughing before we even start recording, okay?
Yes, I can.
That's fair enough. Fair enough.
And you did.
I did.
Oh, our special guests hopping in early. Hold your horses here. Let me get through the intros. Teddy, how we doing today?
I'm great. Thank you. How are you?
Wonderful, wonderful. We're recording on a Monday afternoon, a special episode of our podcast here. Joining with us today, we have Eric Harmon, the VP/Business Director of Encova Insurance. Did I say that right?
You got it, man.
Welcome.
Thank you. I appreciate you having me.
We're glad to have you. Tell us about Encova and your role day to day.
Yeah, sure. So we are a regional mutual insurance company. We write all kinds of insurance, primarily for business. 75% of what we do is commercial insurance.
Okay.
Workers' compensation is the biggest part of it, and then auto, property, liability, umbrella insurance for a wide array of industries. But
cool.
We operate very much adjacent to the logistics industry. So Teddy tapped me on the shoulder and said, hey, what you do, which is insurance, I'm not sure it's interesting, but she said you'd be great. So here I am.
Insurance, it's certainly applicable to business, to trucking, to everybody.
Yeah, right? I think... for the general public, insurance is the beginning of a snooze fest. But yes, for the financial world to go round, for the logistics world to go round, insurance certainly plays a big part of it.
Yeah, absolutely.
Well, I think it's only a snooze fest because no one understands it, especially when you think about like what I used to do on a day-to-day, like a claim, getting insurance involved that way. Mm-hmm. It was so confusing. So people just tended to like zone out because they don't understand.
Yeah, I think that's kind of it's why I fell in love with it. I mean, if you told me as a finance major in college that insurance is going to be your career, I'd tell you you're crazy. I'd never had an interest. There's a really funny story about, how I got in this business, telling the president of the company at the time I had no interest in insurance. And here I am 14 years later and have a staff and really, really have fallen in love with it because it's so different day to day. And the contracts we read, the coverage we provide, again, just it provides a financial backbone to give companies the confidence they need to enter into various business deals.
How do you two know each other? Let's get that out of the way first.
So Eric was best man at my wedding.
Yeah, I've known your husband since we were in the 5th grade. So and we both have 3 girls. Teddy and Jay have 3 girls, and we've got my wife and I have 3 lovely girls that are becoming good friends. So. We've known each other a long, long time.
Yes, we have.
That's awesome. All right. So my insurance background or my insurance knowledge is I pay insurance monthly, yearly, whatever. And theoretically, if something bad happens, said insurance is going to replenish me.
So the most basic concept of insurance is this idea of indemnification or, simpler said, making you whole. So whether that's, to kind of use your simple example, I think, homeowners insurance is the easiest kind of basic concept to it. You lose part of your home because of a fire or tree falls on it, what have you. We will pay to rebuild that part of your home.
That's the section.
Correct. So we are not here to take your $100,000 ranch and turn it into a $2 million palace when you have a
right.
loss. It is truly to put you back where you were had the loss not occurred. So we carry that concept across all of these lines of coverage. So for an injured worker, to pay their wages and their associated medical benefits or claims, that's part of the workers' comp coverage. And, from an auto perspective, if you are at fault and bang into the back of somebody, we're here to pay for their medical coverage, damage to your vehicle, damage to the vehicle that you hit, and any other liability that would extend out of that circumstance.
Very cool. Okay. Good overview. We deal specifically or primarily with what we call CPG shippers, customers, etc. Consumer packaged goods. So snack food companies, food and beverage companies,
Sure.
anything you can buy at a store. In that scenario, we have a shipper, a place where we pick up the freight, a receiver, a place where we deliver it, a trucking company that we contract to move said freight. Who would you insure, or who gets insurance out of all of those three? Hint, I think it's everybody.
Correct. Yeah, you're exactly right. So all three people or all three parties in that arrangement require different insurance, right? So if you're let's back you up even one step further to somebody, we deal a lot with manufacturers. That's a segment we play and operate in. And actually, I'm working on a food products manufacturer out of Louisville today, even. So that product, the production of that product, when you put it out into the market or you sell it to other companies for their use, requires liability coverage. So if you make somebody sick down the road, well, that from a legal standpoint follows its way back to the original manufacturer. So the manufacturers need it. The shippers need it. They've got trucks on the road. They're carrying goods that belong to others. So they have the need for cargo insurance or various, other insurance for those goods that are aboard their vehicles that they're loading and unloading as they're picking up and delivering those goods. And then the auto liability that comes with that as well for those logistics firms, the trucks. We don't operate in that space a whole lot. We do the wholesalers, the distributors. So look to your local Encova agent for that. There's my little plug. But the trucking insurance is a highly, highly specialized area for firms that specifically, we call it for-hire trucking. And we try to stay out of that arena, generally speaking, because it's so high hazard. And while that may seem weird that, hey, there's somebody on a podcast about logistics talking and telling the world that, hey, we don't write trucking insurance. But I think part of what we'll get into is why that is. It is a highly, highly specialized line of coverage and a product to place. And it's highly, highly expensive for those third party, those for-hire trucking operations, those logistics firms.
That makes sense. So some of the folks who oversee our business, our industry, the DOT, the Department of Transportation, and the FMCSA, Federal Motor Carrier Safety Association.
Right.
Well done.
Nailed it right off the bat. They have requirements, right?
Our tax dollars at work, baby.
There you go. Minimum auto liability of $1 million, minimum cargo liability of $100,000, and equipment that's no more than 10 years old.
Mm-hmm.
That's the minimum requirement.
That's the minimum requirements. That's correct.
Okay. Is that enough, Eric?
Ooh, that's the $1 million question, quite literally. Like I said, so it's a very complex question. So there's a couple schools of thought. You can kind of look at your asset base as an organization and, depending on what your asset versus your liability mix is, could help determine what an appropriate limit of liability is. Because here's the bottom line. It's inevitable. It's not if it's going to happen for a shipping company. It's when, unfortunately. We've all been on roadways around Central Ohio here. It's crazy. People are flying and it's busy, and especially for these truckers that are on the road over significant distances and for significant amounts of time, it's easy for an accident to happen. And unfortunately, when you get a big truck rolling, carries a lot of liability potential with it because the catastrophic nature of those accidents is so significant. Unfortunately, when someone is involved in an auto accident and they're at fault, it can run in the several millions of dollars to adjust that claim and get it paid for and get yourself dismissed from a jury situation that's inevitably coming.
Right.
So, for instance, we just had a situation with a construction risk in southern Indiana last year where horrible situation. Our guy didn't see a motorcyclist. This poor guy pulled out in front of him. Motorcyclist put the bike down. The guy unfortunately passed. He's like all of us. He's got 3 kids, a wife, makes, a decent living, and $6 million later, Encova's out significant funds, which is fine. That's why we're here. That's, that's from an insurance perspective. That's, we are here to pay claims, and we're here to, our old CEO used to say, we're here for when bad things happen to good people. Mm-hmm. And that's really the entire, the non-financial aspect of why we're here as an insurance carrier.
Go ahead, Jenny.
I think that's a really good point, and I think that's why it says minimum so many times. Sure. And Jesse, you and I dealing with claims firsthand with customers, It is pre-market value of what we're claiming against just the product alone.
Right.
And sometimes that is not enough either, because people need their stuff. People need their bottled water, their diapers, things like that.
Yeah.
I know we've talked about it before. I get irrationally upset when the Teddy Grahams are not stocked in for my kids' snacks. And that stuff makes a big difference. And our customers know that.
Well, there's an element of the timing and the requirements, right? We've talked about this on many episodes of our Truck Yeah podcast. Just delivering into these major retailers, right? We have to hit these metrics to ensure that we are partnering with them correctly, right?
Yeah.
And so we at Zipline, there's minimums that are required by the DOT and the FMCSA.
There you go.
And there's even more required by Zipline.
Yes. So Zipline goes above those 3 examples that you gave earlier. So we have no history of fraud. So we actually are digging into these carriers to make sure that there is no fraud. We want to make sure they have experience shipping into these retail facilities so they understand the importance of it. They understand to take the right routes, avoiding low bridges or very mountainous areas to avoid shifts. We have GPS tracking capabilities so that way we can see where the product is at all times. So we can actually note if there's going to be a delay or if there's an issue and handle the claim accordingly right then and there. Consistent check-ins and on-time performance. So again, when we're dealing with claims, it is all about the products. But it's really important to understand insurance totally and how it works. And Eric, I think your example is really perfect there is, when we're dealing with claims, it's my product didn't deliver. That's nothing compared to someone, like losing a family member or having an issue on the road. And understanding that from the start is really important for people to understand why insurance is there.
What's up, truckers? This little ad break is to let you know that Zipline Logistics will be attending Natural Products Expo East this year. If you haven't heard of it, Expo East is a trade show where CPG brands can network with the best healthy lifestyle buyers on the East Coast, and it's taking place in Philadelphia, PA on September 21st through 23rd, 2023. Zipline exclusively serves CPG shippers, so we continuously attend and sponsor trade shows like this because it's a great way to support and invest in our customers and the CPG community as a whole. We'll be set up at booth number 2532 and serving free breakfast every single morning and hosting a free happy hour on the 21st and 22nd. So come by and see us or let us know if you'll be at the show on LinkedIn at Zipline Logistics.
Absolutely, Teddy. I mean, and truthfully, these couple bullets you have here, things like having GPS, having cameras in cabs to and it feels like Big Brother to a lot of drivers, but at the same time, it's there for their own protection as an individual, representing that company. Forward facing cameras, rear facing cameras. All that stuff is so expensive to not only install, implement, maintain, train your drivers on,
right?
But it's an absolute necessity for a lot of to even qualify for a lot of insurance programs. So it's a big reason why insurance specifically and shipping costs have gone up so significantly, and we're all feeling it. At the grocery store, at the pump, wherever. Costs are through the roof, and this drives certainly some of that. It's expensive to run a business, and especially a professional business where you're going to invest in your people, invest in the safety of your drivers, and in the quality delivery of getting things where they need to go on time.
And you mentioned you no longer insure trucking companies, correct?
So yeah, it's and again, it's a little weird, being on a logistics podcast when we don't write trucking. We and my bosses that may or may not listen to this, we do not write trucking, and they'll appreciate that. But again, so much of what the insurance that we do write has these same exposures, which is why I'm passionate about it, and why when Teddy and I were talking about how I could maybe contribute today, there's hopefully some passion in my voice around it. It's the firms that these construction companies have big whether it's concrete trucks or dump trucks or what have you over the road. Every day, electricians that are coming to your house and then flying around the block and going to Teddy's and then coming into your office to work. There's trucks on the road of all sizes, shapes, and wholesale distributors have that similar exposure. I mean, I could go on and on, but so it's something that while for third party for hire trucking we don't get involved with, we are certainly in the ball game.
I think that's so important too. Another thing that I've learned through the claims I've dealt with over the last 11 years is that there are, not to be mean, but there are a lot of loopholes in insurance. Like basically when you're looking at a claim, everyone's getting the information together to put the story together. And I've noticed a lot of, I guess, loopholes, gray area, something between carrier insurance that, I guess keeps them liable. So it's so important for the shipper, for the customer, for the receiver to have that insurance as well, so they can actually get back what they need. So it's not just, oh, the carrier has insurance. That's great. That is great. They need it. But so do you.
The right kind of insurance is key.
Yeah.
And I'll explain that a little bit in that if you're a motor carrier and you are maybe sloppy on some of these, what I'll call controls, around drivers and safety and what have you, and you have claims, maybe you have the big pop and, you have a fatality, or you have several, we look at the DOT and the FMCSA, we'll get there. What they do provide is some good data on, when you see a truck pulled over on the side of the road and they're being inspected, that data gets dumped into a database where a lot of insurance carriers can watch basically how you perform. If you're a carrier with a lot of violations, your insurance costs are going to go up, and or you may not qualify at all in certain cases. So, and Teddy, what you were alluding to there is not all insurance is created equal. Is kind of what I tell my clients, and I guess what I mean by that is there's certain conditions, certain exclusions, certain language that from carrier to carrier can be different. And that's why it's and the harder you get to insure, the tighter those conditions get, the more exclusions start showing up, the lower your limit that a carrier is willing to roll out to you is going to be. So for, the logistics firms listening that have trucks on the road, that's why it's absolutely imperative that you spend time, spend resource, spend money in that area to protect yourself, because it's gonna, if you can't buy insurance, or I've seen companies where literally, on average you should spend anywhere from 2 to 5% of your revenue on your insurance. I've seen some trucking auto related companies, there's a tower that comes to mind in my past, they're paying about 33% of their annual revenue in auto and umbrella insurance. That's absurd. And that's taking money out of their drivers' pockets. It's taking money out of the owner's pockets. It's taking money out of maintenance, and it's taking money out of all these other things where if they invest in this stuff, not only are their drivers going to be better protected, their business is going to run smoother, because even though we're indemnifying you when we pay a claim, it's highly disruptive to have claims. You got a truck's off the road. You've got, a section of your building that's down because we're sloppy getting it maintained, what have you. It's disruptive to your business. So, and that's one key principle in Encova. It's not just about the premium you're paying, but we try to partner with companies to reduce your overall cost of risk is the concept that we talk about. We have safety and loss control consultants that consult directly with safety folks from these organizations that we work with. And we try to not only, provide a product that fulfills contracts and, will pay claims when losses occur, but we truly try to ingrain ourselves with the business to improve their day-to-day operations, improve the safety of their associates.
I think that's so important too, because it's similar, like we won't put a certain value product on LTL. We make sure we use the right mode and the right truck for every specific customer. It's not like, oh, you're CPG, here you go, you can do this. We look at that customer specifically to do exactly what you're saying and, hopefully avoid some issues. Or if the issue happens, make sure that customer is covered, make sure we know what to do so we can jump right into that process and keep it smooth so we don't have a huge issue that we're dealing with while trying to convince the customer that everything's still okay, and then have to go into doing a replacement shipment.
I like the fact that both groups here, you mentioned the people that you work with, and certainly we do this on a day-to-day basis, is planning ahead, talking about things that we can do, control the controllables, right? You do all that stuff on the front end, the back end issues that arise are going to be much more easy to deal with, theoretically. Obviously, there's problems, but they should be easier to deal with. They should be easily solvable. And everyone's going to come away feeling like it was a partnership versus just, oh yeah, we had an insurance claim and this guy got all the money on the back end. That's no fun.
You become far easier to defend as a client when you do the right things day in, day out.
Yeah.
And I tell my team, I tell my kids, you earn trust a drip at a time. You know, when something happens and, you know, a large loss inevitably occurs, because that's what we're in the business to do and take care of. You've earned equity with me for every other little thing you've done right up until now. Yeah. So, you know, for instance, that account I referenced, or that large auto fatality in Southern Indiana, we didn't go take their premium through the roof. We didn't non-renew them. We didn't cancel them. That was a 20-year employee that something really bad happened. And so I guess my point is, when these organizations, wholesalers, distributors, you know, manufacturers and for-hire hauling companies, when you guys are doing the right thing day in, day out, it matters. It matters come claim time. It matters when you get your driver, your safety person in front of a judge and a jury, and you're trying to explain what happened. If you've got those safety and loss controls in place, it's gonna get you out of that claim a whole lot faster, and it's gonna mitigate your financial impact.
Yeah, that communication is everything, which happens to be one of our values.
How about that?
That's so great.
What did we miss, Teddy?
Well, I was going to say, with that, I think you and I did some research, you know, getting ready for this, and we were looking at when these minimums that we were talking about earlier were established, and it looks like they were established in 1982, and it also looks like they haven't changed. Inflation has raised rates a little bit, but overall, these minimums have stayed the same. But if you compare examples going through the examples that we've given throughout this podcast, it would be very different a couple of years ago to what it is today, as far as what the costs are, the issues, you know, anything that would happen if a claim were to be filed. And I think that that's really interesting, because you need to know the right questions to ask. You also need to have the right partner, no matter which situation that you're in, to be able to tell you these things, to be able to be upfront and say, if you aren't doing these steps, you could have a big issue. Yeah. And you need to be able to listen to that too, which is part of communication. So I think that's really important to understand, that no one actually understands what this is other than maybe you, Eric. We need to make sure that people ask the right questions and listen to the answers.
Well, and to your point, I mean, you can't rely on the government to keep us all safe, as much as maybe some people like to go through life thinking that. Yeah. They are not here for necessarily always our best interest. There are other things in play. And to your point, you haven't updated a minimum requirement since 1982. Yeah. So, you know, we were talking about inflation and the impact it's having on insurance. You can have the same exact accident in 1990. You can, you know, I'll just use a simple, you know, rear end collision. Now, if you're fixing the truck that hit the van in 1990, do we think it costs more or less for that bumper and that paint job in 1990 than it does today? And what's been really driving rates over the last, I'll call it 18 to 36 months, has been kind of this cycle of inflation we're in. You know, we're seeing the same exact claims, and, you know, weather's been a little up and down. You know, there's this concept of social inflation that's kind of out there, where whether you were at fault truly or not, that, you know, somebody's got to pay for this because something bad happened to somebody. So we're going after deep pockets. And I mean, we've seen so many claims that you know, just your blood boils, because, you know, there was nothing your insured necessarily did wrong. There's nothing a carrier did wrong. And because something bad happened to something that involves their operation, off we go. And, you know, we're talking $2, $3, $4 million verdicts in no time, where those claims used to be a couple $100,000 potentially to mitigate and be done with. So it's been a crazy trend. It's everywhere, unfortunately. And it's why we're all feeling insurance costs go up, whether it's home or business insurance.
Well, I was born in 1982, and I'm old as hell, so I'm not surprised that things are more expensive now. We are very selective with our carriers. It was an easy transition there after calling myself old as hell. We do all the front-end work, just like it sounds like you do, Eric. All right, that's Eric Harmon with Encova Insurance. You can reach out to him on LinkedIn. As always, reaching out to Zipline 888-GO-ZIPLINE, www.ziplinelogistics.com. Thanks so much for joining us today. We'll see you next time on the Zipline Logistics podcast. Take care.